afternoon, ladies and gentlemen. I want to thank you for honoring the invitation of being part of the 10th edition of the Non-Life Insurance, Banking and Financial Service Awareness Month, moderated by myself. And my name is Juliet Igonu. I work with the Uganda Insurers Association as the Technical Officer for Non-Life Insurance. Today, we will be able to discuss all aspects as far as non-life insurance is concerned, and our campaign slogan for the month on this awareness is "Your money can be money smart, Senteyo Esobola." You can get in touch with our Twitter handle #YourMoneyCan, and also visit us on our web portal at www.yourmoneycan.or.ug. The campaign is brought to you by the Uganda Institute of Banking and Financial Services in collaboration with our strategic partners, that is Bank of Uganda, Uganda Bankers Association, Financial Sector Deepening Uganda, Uganda Insurers Association, and Summit Consulting Limited. Not forgetting our platinum sponsors, that is the Bank of Africa, Uganda, actually one platinum sponsor. Thank you, Bank of Africa. Of course, we also had other sponsors, that is EcoBank, Equity Bank, KCB Bank, Absa Bank, Uganda EFC, Uganda, Finca Uganda, Equity Bank, Pride Microfinance, Ugaford Microfinance, Stanbic Bank, Opportunity Bank, Bank of Africa, Bank of India, BRAC Uganda, Housing Finance Bank, and Centenary Bank. Thank you very much, our sponsors. You have made it possible for us to actually make this a reality. The 10th webinar in the Banking and Financial Services Awareness Month series, we have so far had discussions around different pillars on the financial literacy. Allow me take you through those that have already been addressed. That we have becoming better at savings was the very first edition. Then becoming good at personal financial management, savings as a tool to entrepreneurship, money and family, how to strike a balance between savings and investment, traditional modes of investment versus contemporary options, credit facilities, their terms and conditions, early planning for happy retirement, and finally, the insurance as a tool for business survival. So these are the 9 editions that we handled. And today, the 26th of November, 2020, we are happy to bring to you insurance as an enabler for business growth and continuity. Before I introduce our panelists of the day, allow me briefly take you through a background on why we think insurance is an enabler for business and continuity, business growth and continuity rather, sorry, I beg your pardon. But before I do that, Uganda Insurers Association is the mother company of all insurance companies. We're birthed in 1965, and our membership stretches from non-life companies, licensed companies, life licensed companies, microinsurance companies, reinsurance companies. Before you get a license from the regulator, you're required to have a membership certificate with the association. So we pride ourselves in the fact that the regulator recognizes the value and the relevance of the association. So they are able to peg a license to membership to this association. What we do mainly as an association is we protect mainly both the interest of the insurance companies and also the general public. So we do lobbying, advocacy, consumer awareness, and many other things that come along, as long as they are all on protection and insurance related. So thank you. And quickly, insurance as a strategic enabler, we believe that when you understand where a company wants to be in the future, identifying risks that might stop it from getting there, and working with risk advisors and insurers to get the right risk management, transfer, and mitigation strategies in place, all this will help build a resilient and sustainable business. So to realize this ambition, businesses should be asking their risk advisors or insurance companies to look beyond the existing insurance programs and examine the company's short and long-term objectives together with its risk register to fully understand the wider range of risk it is likely to face. We believe that insurance can be seen as a tactical purchase with the decision on what insurance to buy and from whom, sometimes coming down to the cost and minimal compliance with legal requirements as opposed to the quality of the cover. This is particularly true in the current competitive economic environment where companies are squeezed and cost savings need to be made. This approach, while appearing convenient in the short term, ignores the fundamental value of good quality insurance and its strategic importance in building resilience for the future. So the risk faced by companies, both large and small, are constantly changing and increasing in the number, diversity, and complexity. So this trend is demonstrated by the growth in the digital economy and an increasing dependency on sophisticated data, so exposing businesses to potential cyber attacks and then also the loss of customer data. So in several high-profile cases, this has led to significant reputational damage accompanied by several severe financial loss, much of which could have been avoided by business understanding the risks they faced or exposed to. But somehow they might change in the future in implementing the correct risk mitigation strategies. The importance of the right insurance and risk advisor is very clear. So we believe if you understand the relevance of insurance and you're able to get the right risk advisor, then all your fears are laid off. So if the purchase of insurance and risk management advice is not a key strategic decision, a business cannot fully make an informed decision for its future. And this is very dangerous because what would have been your long-term desire may come to a full stop. So the importance of understanding these risks and how they might affect a business cannot be understated. And successful companies are those that place risk identification and mitigation for now and in the future at the heart of their business strategic planning processes. So to give us more insight about insurance being an enabler for business growth and continuity is Mr. Ambrose Kivuka from GA Insurance Company. He's also a member of the non-life committee at the association, the Uganda Insurance Association. Mr. Ambrose Kivuka has 10 years of broad insurance experience gained during his work for key brands in the Ugandan market, five of which he has been in senior leadership position. Mr. Ambrose, as we speak right now, is a general manager at the GA Insurance Company. He holds a bachelor's degree in statistics from Makerere University and the coveted advanced diploma in insurance, that's the CII, from the Chartered Insurance Institute, London. He has also graduated. He is also a graduate of the Stellenbosch, sorry if I beg your pardon on that pronunciation, University Business School's Leadership Development Program. Mr. Ambrose, you might have to throw more light on that. I am struggling to pronounce the university. So In addition, he has attended several leadership trainings, both local and international. He is an associate member of the Insurance Institute uh, of London and a chartered member of the Insurance Training College Uganda. Welcome, Mr. Ambrose Chivuka.
Thank you. Thank you.
Yes, I now invite you to take us through a presentation on how insurance is an enabler for business growth and continuity. Over to you, Mr. Ambrose Chivuka. Thank you.
Okay, thank you very much, Julie, and good afternoon, everyone. I'm very, very happy to be here. I will now just put up a few slides and then we'll make some introductory remarks. Very happy to have been given this opportunity by the Bankers Association and the Uganda Insurers Association to participate in this public awareness effort. Julie has introduced me ever so kindly, so I will not belabor my credentials any further. One thing I have to say is that I am a teacher of insurance as well. I love to talk about insurance because I think it's a seldom understood topic, yet at the same time, it is a very important topic because without it, we would have very little fallback in the event of disasters befalling us. So the reason why we have insurance is what is going to be the main topic of discussion I have today with you. And let me just share with you my outline of the presentation. Sorry, my dear friend Julie, I know I'm using the old logo, but I couldn't easily get the new one. So pardon me for this one. Yeah. But this is what we're going to be covering. We're going to be covering the meaning of insurance and also have a Ugandan and a global overview of what insurance is and what it does. We will look at why we should insure. We will look at examples of major claims paid in Uganda. This is important so that our audience can appreciate that indeed insurance is working for those who have taken it. And then we will look at products that are available in the market. And then we will also guide our audience on how best they can access insurance services in Uganda. And then hopefully we shall have a time to have a Q&A where I am happy and willing to take any questions that the audience may have. So what is insurance? Insurance is one of the ways that we respond to the risks inherent to day-to-day living. I think on any day, any of you who are here, who are in this webinar, know that the moment you wake up and you are leaving your home, you start running risks. Even while you're at your home, you run risk at all times. Even when you're sleeping, there is risk that is occasioned on you, because I think you're very well aware that you could be in your bed and the building you're in collapses on you if there is an earthquake. It has happened in some parts of the world. Here in Uganda, we are blessed. We are not in a very highly active earthquake zone, so that risk may appear remote to some of us. You may be sleeping and some thugs want to break into your house. They may even succeed and break into your house. Now, if they break into your house, they could maim you, they could leave you injured, or even if they don't injure you, they could take away your things, your valuables that you've worked very hard to acquire. Those are risks you have at home. You could have a risk of going to the bathroom and sliding and falling. We've had a number of people in Uganda, even prominent ones, who have died simply because they slid and fell in their bathroom. So that's at home. We once had a claim in my insurance experience where a lady, a powerful lady in another organization, was simply carrying a saucepan full of hot water. She slid and fell, and the water poured on her, and there she was with third-degree burns on her chest. So, risk, my point here, what I want to show you is that risk is with us all the time. You will find that the moment you step out of your home, you hop onto a border, you get into your car, you're in a taxi, risk is occasioned on you. Yesterday's news reports were showing a vehicle up country that veered off the road, fell into a river, 4 people dead, a number injured. Those people left home without knowing that 4 of them were going to die, and 9 of them are now nursing injuries in hospital out of no fault of their own. They couldn't foresee that. But these are things that happen and they can befall us at any time. So, with that context, this definition of insurance helps you to see how we respond to risk. So, insurance helps you to transfer the financial consequences of the occurrence of certain risks. If they materialize, you transfer the financial consequences of that occurrence to someone else called the insurance company. Examples would be when you have a car, you run a risk that one of these days you could run into another car, have a head-on collision. You will run the risk of having knocking a pedestrian or a man on a border. You run the risk of your car being stolen. Just you park it and you go back and you don't find it. So those risks related to your car, you can choose either to accept them so that when they happen, you pay for them out of your own pocket. You can choose to transfer them and transfer them to another party, the insurance company, such that if you knock a third party, you knock a pedestrian, you knock a border rider, the compensation you have to pay those people comes not from your pocket, but from your insurance company. That is a way you would have transferred that risk. The same happens to a company. A company may have employees. By law in Uganda, employees should be covered for accidents that they suffer while they are at work. So if these employees are at work, maybe on a work trip, and the company vehicle they are in has an accident and some of them get injured or even worse, die, or employees who work in a factory can be injured. We've had cases of people's hands being chopped off at production lines. The employer has that risk to compensate those employees. But you see, they can never know how many employees will be hurt at the production line, how many employees may be injured in a car crash or anything like that. So the best approach would be to have insurance in place such that in the event that those things happen, they can fall back to their insurer and ask the insurer to make good that loss. So by paying a little premium, that is the consideration for the insurer taking on the risk, you're able to push all those worries to another party. And I think the mechanism of insurance is that simple, really. We don't want to complicate it. However, as we think insurance, we also need to know that not every risk is insurable. For example, let's talk about the risk to families. Let's go to individuals. For individuals and families, one key risk is illness. Imagine the breadwinner of a family, maybe the father or the mother, falls critically ill. They have a stroke. They are in an accident and they break their spine. They are now unable to walk. Or they suffer any form of other illness. That can be a risk to the family because the breadwinner may no longer be able to work and deliver the necessities of the home. Another risk in the family is death. Death of any member of the family, be it a child, be it a spouse or the breadwinner, a father, a mother. It has financial impact on the remaining members of the family. Things like fire, burglary, I think you know very well. We always put high walls around our homes. We even put cameras, we put electricity around the fence. Why? Because there's a threat of burglars coming to break into our homes, wanting to take our precious assets. So these risks occasioned to individuals are risks they can choose to either take on their chin and accept to bear on their own, or they are risks that they can shelve or transfer to another party, the insurer. How about organizations and businesses? Now, for business, the risk profile become even wider. You see legal liability to staff. We've talked about that. There is also legal liability to third parties. If people are in your premises and they suffer any form of injury, be they falling on the stairs, they would hold you liable as the owner of the premises. That is why even in car parking lots, you find owners of car parking lots saying liability, you park at your own risk. Because they know that by the fact that they own the property or they are running the property, anyone who has their property there can hold them liable if the property is damaged. Um, in our neighbors here in Kenya, about 2 years ago, there was the Dusit Hotel terror attack. Here, the terrorists attacked the front entrance of the hotel, the Dusit Hotel, very high-end hotel, and a number of people were killed. Property was damaged. They blew up the building, and a number of cars, very good cars, which were parked in the front of the property, were all burnt. The owners of those cars held liable the people who ran the Dusit Hotel. And because the Dusit Hotel had insurance in place, the insurers were able to compensate the people who lost their cars, families of those who lost their lives or were injured, and the hotel itself was reconstructed. So that business benefited greatly from its insurance. Now you will find that they may have been paying for insurance for years, maybe 5, 10 years, without there being any major problem. But the thing is, insurance is always valued, and people come to appreciate it very much the moment that they are able to receive a claim settlement from their insurer. That's when they finally, especially here in Uganda, where the appreciation for what we do is still a bit low, that is when they finally know that, you know what, insurance was worth it. I have suffered a misfortune. My car has been damaged. My property has caught fire. Someone has sued me or anything else, and they get compensated. So that is about legal liability. And things like fire and burglary. A few weeks ago, you saw a foam factory burning on the news. There was a foam factory burning in Jinja. Whenever you see any of those, know that there is an insurer, most likely, who is going to put that business back into operation by paying them compensation for the loss they've suffered. With that money, they are able to go buy new machines, reconstruct their factory, and continue in operation. Interesting one is the directors and officers' mistakes, especially in the more litigious world that we live in, and for listed companies. By listed companies, I mean companies, say, that are listed on the Uganda Securities Exchange and other security exchanges, such directors and officers of such businesses are at times sued by other stakeholders for bad decisions they make as management, as directors. So such a risk can be taken care of through insurance as opposed to the individual directors paying for such liability or the company having to incur any costs related to such liability um, in-house. Then those who are into transport of goods, imports and exports, you have your goods in transit. In insurance speak, we call that GIT. You have your marine if you're importing goods from far. I didn't mention it here. And then road accidents. Ugandan roads are famously among the most dangerous roads that you can come across in the world. And road accidents have robbed us of people we know. At least many of us know one or two people who perished in a road accident or whose life was completely damaged in a road accident. So these are risks to business, and they must be worked on, as in they must be addressed. Now, what solutions does insurance offer when you run such a risk? Well, uh, I am short of time to go through all of the offerings that insurance has. However, here I bullet point some of the key insurance policies that I think our audience here would be interested in. One is home insurance. Home insurance is my favorite, that's why it's number one there. Because one, it's very, very cheap. It's affordable to anyone who owns a home. What does it cover? It depends on the nature of the risk. Some of you are renters, so you stay in this house, but you're not the owner of the house. So as a renter, your interest in the property, in the house where you stay, is not as an owner. You're interested in the long-term viability of that building because you may move the next day. However, you're interested in the contents, your assets that you brought into that house if you didn't go into a furnished house. So if you're like typical Ugandans, we move into a vacant house and bring in our furniture, we bring in our electronics, our kitchen equipment and all of that and set up our home in this rented house. Now, even a rented house can be broken into. Even a rented house can catch fire. Even a rented house can have a power surge where electricity increases suddenly and maybe your TV blows, your cooker blows, your fridge blows, and you there and then have lost a lot of assets. Home insurance would take care of those home contents. So all you would have to do is provide a list of the contents with their values, and an insurance company through maybe a broker or an insurance agent, or you can talk to insurers directly, would be able to offer insurance for those assets. As well, you incur third-party liability to your visitors because visitors may come to your house and then suffer maybe food poisoning, or they could have an accident while in your premises. So if that happens, you would have fallback to your insurance policy under home insurance. You can also think about your domestic workers. Do you know that you're also liable for your domestic worker? When you send them to Nakasero market, you send them to Nakawa market to buy groceries. What if on that border or while they're walking in the markets, they are hit by a border and they get injured or they die? You as their employer, they're your employees as your domestic workers, are liable to compensate their families or to treat them. If you have home insurance which has a domestic workers extension, you would be able to get their treatment covered by the insurer, or if they are dead or injured, their compensation would come from the insurer. That way you manage to maintain very good relationships with your workers. Another, which is very common and on many people's minds, is motor vehicle insurance. Here you have various forms of insurance. One is the statutory third-party insurance, which many people today in Uganda buy, not because they believe in insurance, but because they think it's a requirement to get past the police. Some studies show people look at third-party insurance as a tax. However, it is not a tax, it's not required just by the police, but it is insurance for you. It is insurance for you as a car owner, in that if you knock someone and injure someone or they die, that insurance policy gives a level of compensation to be able to offer treatment to the injured person or to pay compensation to their family in the event that the third party dies. So the statutory cover under motor vehicle insurance is restricted purely to bodily injuries. So the statutory cover is to bodily injuries or death, and it gives up to 1,000,000 shillings per person in the event that as you're driving your car, riding your motorbike, you hit someone. Under motor, insurers have created other products to respond to market demands, because the market doesn't need only to cover third parties. How about if you damage another person's property? You've not hit anyone, so you've not injured anyone, but you've hit someone's property, like another car. You ram into another car from behind, or you hit someone's wall or something like that. If you do that, a statutory third-party insurance would not help you. But an enhanced third party, which covers both third-party liability for injury and death to people, and also property damage, would come in handy. Or you may want to extend the cover further and do third-party fire and theft. There you would cover the typical third-party risk as described, and then you have covered as well theft of the vehicle or fire damage to the vehicle. And then the best cover that is available in the market is motor comprehensive insurance, which covers the car. In case the car is stolen, you will be compensated to buy another one. In case the car is damaged in a car crash, you will be compensated to pay for repairs. If it is written off, you will be given money to buy another car. It goes far and beyond. Paying for partial damage, for total loss claims, paying for third-party liability, and insurers in Uganda, due to continuing innovation, have been adding more and more sweeteners to the comprehensive motor vehicle insurance. So risks associated with cars, that is your cover. Then you have your fire and burglary insurance. Here I am looking at it from a commercial standpoint. Here I'm looking at cover for people who are operating offices. Here where I'm seated at the office of GA Insurance. This office could catch fire any day. Anything could happen. It could be an electrical short circuit. It could be deliberate arson by someone. It could be terrorism. It could be anything, but it can catch fire here. It may not be fire. It could be flood. It could be power surge. It could be anything, but things could get damaged here. So if that happens, fire insurance would come in handy. I don't know if you've seen it, but a neighboring premise here in our office was once broken into, and all their electronics were stolen and taken by thieves. That would be covered under burglary. So burglary covers you for people breaking into your house or your property and taking out valuable assets. Then liability insurance, we've alluded to this when we were discussing in the video covers. And liability insurance covers you as a professional and as a common citizen of Uganda. As a professional, liability is classed as professional indemnity insurance. It would cover lawyers for their errors and omissions, cover people like architects, engineers, and others. So that is cover we sell to people who, in their professional duty, are required to perform to a certain level of standard. For example, if you go to a hospital and you see a person with MBS something, that's a qualification of the doctors, you think they will be able to treat you up to a certain level of, of care, due care. So if these doctors are negligent, they operate you but fail to, for example, clean out what is it called, the sponge they use to clean out the wounds, and it causes an infection later, or anything. They give you the wrong treatment. There was a famous case in Kenya where the wrong patient was wheeled into a hospital bed for brain surgery, and it turned out that they had opened up the head of someone who different. Such errors and omissions by a professional while performing their professional duty would be covered under liability insurance. Now, liability also goes to what we call public liability. Here, the typical case I've had in my experience was when a fire started in one premise and then spread to neighboring premises. When the fire spread to neighboring premises, all those premises held liable the owner of the property where the fire originated. They said if you had not allowed a fire to happen at your place, we wouldn't have had a problem. They held him liable, and the person had to compensate them. Fortunately, the person had insurance, and all those affected third parties were compensated. Then you have things like travel insurance. We mentioned that when you leave your home, the moment you leave your home, you're subjected to a whole set of different risks. So travel insurance helps you with medical costs that you may incur while traveling. It helps you with loss of your property, like baggage. It helps you with personal liability and all those loss of documents, loss of your passports and such when you're traveling outside Uganda. And marine insurance and goods in transit, we've talked about. These are mainly for people who are into importation and export of merchandise. There are lots of other insurances we could talk about, but I think for our audience this would suffice. But there are insurances in the engineering space. There are insurances tailored to banks. There are insurances tailored to innovators. There are insurances for uh, low-income earners, like micro-insurance offerings. There is insurance for funeral. There is medical insurance. There is life insurance. In fact, here I omitted to mention life insurance. It is the solution that we have towards critical illness and death. For example, if a breadwinner had life insurance and they die, there would be compensation, monetary compensation to their family to keep them going and help them financially now that their breadwinner has died or is taken critically ill with this, with say cancer or something. So life insurance products help with that. Here, what you have on the list is generally non-life insurance products because the webinar was mainly based on that. But there are medical insurance products. There is also life insurance products that address risks of illness, risks of death, and risks of being taken critically ill with a chronic illness, say cancer, which is very much in the ears of everyone. Now, moving on, we mentioned at the beginning that insurance is an enabler of business growth and continuity. Why would we say that? Well, business continuity became a topic, a buzzword in the advent of COVID-19 because all businesses finally had a real life experience where they would deploy their BCPs, business continuity plans. So here we were, offices were locked. We needed to continue operating without exposing our staff to COVID and without breaching government restrictions on movement. So such a scenario, if your business is able to continue operating in such a scenario, then it has a good business continuity plan. Now, insurance is a helpful um, um, service to have for business continuity, in that while in this case we saw COVID disrupting operations, other events can also disrupt operations. You can have operations disrupted by a fire at the office. So if a fire breaks out at the office or at a factory, then all workers have to go home, production has to cease, and revenue is lost because you won't be able to satisfy orders, you may lose market share and all. So insurance is able to give you compensation when your factory, your premises catch fire so that you get back into business. So that is helping with business continuity. Uh, that is, I think, the second point there, recovery from catastrophe. And then it promotes good business relations in that, for example, third-party liability and professional indemnity insurance. If someone sues you and you're able to compensate them by means of your insurance policy, that restores relations. And if it does restore relations, it will give you greater mileage for future business. It also, insurance preserves your capital. When we start business, we inject in money. But how would it be if your business, you see it going up in flames, in a freak fire, or in flash floods, or anything like that? You would be at a loss as a business owner. However, if you have insurance, you would be able to recover and continue to recapitalize and continue with your business. Now, the best benefit of insurance is that it evens out profits despite unforeseen events. If businesses were to take every shock and every unforeseen event on their chin and pay for those events out of their own resources, then they can be profitable this year and unprofitable next year because an employee died in an accident and they had to pay a big compensation, or a certain production line broke down and they could no longer deliver products, things like that. However, if such risks are paid for by an insurance company, then the business is able to maintain its levels of profitability overall, despite those unforeseen events. So looking at these benefits, and this is not an exhaustive list, this is what was top of my mind in showing you the benefits of insurance. There are other things that we tell our customers. We tell our customers that insurance sometimes is required for you to even access banking services. If you're putting your property as collateral, you may need to have it insured for banks to accept to give you a loan. We have seen insurance policies like life insurance policies. They are helpful for you when you're getting a loan. You may use your life policy as security for a personal loan. And even the peace of mind, knowing that what you've worked so hard to achieve will not go up in flames in a freak moment and you're back to zero. You have that peace of mind, well knowing that in the event that the unwanted catastrophe materializes, you're able to have it sorted through insurance. Your insurer will make good of it. So I think this shows you that insurance is a key player in the in the success and continuity of a business. Is a key ingredient. So the same way that we have our bankers and we value them, we have our auditors and we value them, we have our lawyers and we value them, it is the same way that we should look at our insurers. And this is something I always mention when I get an opportunity to talk about insurance. Insurance penetration in South Africa is, I think last numbers I saw about 8%, but at its peak it was 15% of GDP. In advanced economies, it's in double digits. Go to the USA, to Scandinavia, Europe, insurance penetration is in double digits in terms of percentage. Here in Uganda, our insurance penetration, which is a measure of the contribution of insurance to the gross domestic product, is under 1%. It shows you that we are not yet appreciating the value of insurance, and it may well explain why many businesses do not last for the long haul, in that they are not able to recover from disasters because there was no fallback position. Insurance is more like that cushion they put when someone is falling from the sky so that they don't hit the ground and crash to their death. But you put it there and it holds you and keeps you afloat, and you're able to live another day and re-strategize and continue even despite tragedies happening. So all of these are benefits of insurance that ensure that businesses can continue running and businesses can continue growing despite the risky environment, the high risk environment in which we operate. Next year, we are going in Uganda into a political season. In fact, we are already in a political season. Next year, in January, there will be an election. In Africa, well, now even in America, elections are disputed many times. And at times, there is chaos that may develop during the political seasons, like we have had in Kampala of recent. Such political violence, sabotage, and terrorism can be covered in a policy called sabotage and terrorism insurance. So we have basically developed as insurers a full bouquet of solutions that, if deployed by business owners, they would literally be covered against most unforeseen risks. The only risk that we don't cover is a failure in management or a downturn in your market such that you're no longer able to make revenue through sales. But these other unforeseen accidental events would be taken care of through insurance. So that is why my theme was insurance is an enabler. In Uganda, we've had major claims paid, various huge fires that have happened. Many of them, we settle them without making any noise. So most people don't even know that when they see a big fire at a foam factory, when they see a major problem at a power dam. Recently, their power dams were washed away when there was flooding in Kasese on River Nyamwamba. And some insurers will be paying for reconstruction of whole power stations that were washed away in those flash floods. And we as insurers do not make enough noise about these things. When people die, 1 or 2 years ago, there was a company that had sent its staff to Moroto on a company retreat. Unfortunately, the people got into an accident and many people died in one vehicle. Imagine one company having over 20 staff dead because the bus they were in overturned and lost control. Terrible. However, there was an insurer who was taking care of that client and settled all the workers' compensation claims relating to that. And the company was able to compensate the families of the deceased but as well to pay for treatment and compensation of those who are injured. So major claims have been paid under fire. We've also paid a number of bank claims where people attack banks and steal money, maybe through manipulation of systems. These are usually cyber crimes. I've mentioned catastrophic deaths. There are lots and lots of other claims. Due to confidentiality, we can't go into specifics. The fire, which I've mentioned here, was a public known event, and but others like the bank haste and others, we can't mention them because we also value confidentiality when dealing with our customers. So, in a nutshell, that is the value of insurance to a business, and it is something that we encourage all of you, our audience, to consider seriously. It is insurance's model. Maybe I should briefly comment about the model of insurance companies. The idea is we follow the statistical model of large numbers. The law of large numbers shows that most events will follow a normal curve, meaning there will be a few outliers, but most others will cluster towards the middle. So if we are 100 of us and we all each have a Toyota Premio vehicle we own, and we all take insurance, it's very unlikely that all 100 of us will have an accident in the same year. So insurance will collect a premium from all 100 of us to create a pool, and then from that pool, the few of us who actually have accidents are compensated. So in that way, insurance makes you pay something small in order to get off your shoulders a much bigger risk. I can tell you that for my home insurance, I pay under 1 million shillings per year. However, the total assets, just the contents alone that are covered, are over 80 million. When you include my house, the building itself, the value goes that much higher. However, the premium I pay per year is under 1 million shillings. Is that not affordable to many people who own a house? If you can afford to build a house or buy a house, won't you be able to pay that to protect your assets against theft and fire and burglary and flood and all of that? So that is the kind of vibe we are trying to promote here. So I would like to say that's it from me in terms of the highlights of my presentation. And for the rest of the session, I am open to any questions and further discussions. I think over to you, Juliet, to moderate.
Thank you very much, Ambrose, for that very insightful presentation. I clap for you. You actually took me back to class. It was very insightful. And surely you have emphasized the fact that it's important to be able to identify all risks that you're exposed to, because that will help you come up with the different mitigation measures that you need through your risk advisor. So, and it's very important for us to note that mitigation is a key aspect in any business strategic planning that we have, that you put into consideration. So it's very important for us to appreciate the relevance of insurance because of events that may come and are beyond our control, and yet we have to continue with our business operations. Thank you very much, Ambrose.
Thank you.
I now want to bring to our attention the poll questions. And I think Derek will help us. I don't know whether you're able to view them. We have the poll questions over there that we need you to respond to. This will help our presenter, Mr. Ambrose Chivuka, to appreciate and probably have a few responses to it. Then I'll also share the summary of what has come out from the poll question before we close the webinar. So I want to give us some few minutes to respond to the poll questions. We want to pick your minds in as far as the 6 questions are concerned. We want to know your occupation so that we're able to appreciate the people that you've been able to present to. We also want to know if you have interacted with insurance before. And if not, it also helps us to know how much work or what we need to do as far as awareness is concerned. We also want to appreciate your experience, to also get to know the kind of experience that you have encountered with insurance in services. We also want to know the range of policies or covers that you're interested in, so we are able to ascertain whether our policies are still relevant in the industry or we need to go back to the kitchen and start cooking new policies that match and meet the needs of the customer. We also want to be certain on whether you're conversant about how insurance works. Mr. Ambrose has tried to throw a little light on how it works, the model of insurance, but also it's important for us to know whether you actually have an understanding about it. Then whether you can recommend anyone to get insurance. As an industry, we are okay with all kinds of questions, all kinds of feedback. We are very welcoming to them. And then also kindly in the chat or in the Q&A aspect of the webinar, feel free to post in your questions because we have to make good use of our teacher, Mr. Ambrose Chivuka, as far as insurance is concerned. He very well introduced himself as a teacher. So we are not only in a webinar, but also in class. I believe by the time we are done with this, we should be able to get some certificates from him on whether we have made his time worth surrendering. So I'm going to give us a few minutes to just answer the poll question. After that, we shall open up the discussion with the Q&As that have come through so far. Thank you. So the first one by Mr. Serum Joji. I hope I pronounced the name well. Okay, I think let me avoid mentioning names because it might be challenging to get the name. Let me just read the question. With the shocks from the COVID-19 pandemic, that is employee layouts, decline in revenue, etc., what are some of the favorable adjustments made by the insurers to suit the financially struggling customers? I think this is on the effects of COVID. And of course, business continuity really. So
Yes.
may we have your response on that?
Yes, thank you very much. You said the person who asked this question was, okay, I can't see the person's name, but indeed, insurers were not operating in isolation. We ourselves were affected by COVID, and we were very well aware that many of our customers were affected by COVID. One of the key things that we did as insurers as an immediate response was to give a more flexible arrangement for premium payment. So initially, at the beginning of 2018 or 19, the Insurance Act had been updated to now make insurance be on a cash and carry basis, in that you would have, you would have to pay, at the beginning of 2019, you would have to pay your premium upfront for you to have cover. However, insurers responded to COVID through their regulator by allowing up to 4 months within which an insurance customer would pay premium. That way, it would ease the burden of servicing their premium payments. Secondly, the industry agreed to also settle COVID-related medical insurance claims and life insurance claims. This was even put in a circular. from the Insurance Regulatory Authority. And a number of covers have been created as well to deal with the risk posed by COVID-19. So I think that that is a summary of what we've done so far in terms of responding to the impact of COVID, both generally on on the economy, but as well to our customers.
Thank you very much, Ambrose. From David, the first person to ask the question was Mr. Serunjoji. And
Okay.
so, yes. So David Musoke asks, is the sabotage and terrorism cover available in Uganda? If yes, what are some of its provider insurers? Okay.
Yes. Yeah. The cover is very much available, and I think authoritatively say that most of the general insurance companies have this terrorism and sabotage cover, and it covers you for any loss or damage to property, loss of income, third-party liability damage occasioned by terrorism, by political violence, and riots and things like that. So I think Julie may not allow me to name insurers. So I think suffice to say that most of your general insurers will have it. Even us at GA Insurance, we also have it.
Yes, thank you very much. We maybe to just comment on that, we have 21 licensed insurance company for non-life. And like Ambrose says, almost all of them do. They do offer this cover. If you want to get to know who they are, we would interest you to visit our website at www.uia.co.ug. So you see under non-life, you should be able to see all the licensed insurance companies, and you could pick any one of your choice.
Yeah.
The third question by Cynthia Nakoa is, thank you for the presentation. With the current political environment, how are insurance companies preparing to avail cover for their customers?
A very, very good question. I think this is a Cynthia whom I know. And very good. Thank you, Cynthia, for that question. Um, Insurers have already been talking to their customers. Most of the policies we are renewing now, we include an extension to cover civil riots and civil commotion. And then we also extend those policies to cover political violence and terrorism and sabotage, because we know that this is top of the mind of the people, especially with events of last week where we had riots in Kampala related to the political activities. It shows you that our customers are worried about this. So because of that, we are encouraging customers to extend their motor vehicle policies, their home policies, their property covers, their workers' covers to include injury or loss due to political violence and terrorism. In that way, such risks will be shelved off. You see, Cynthia, insurers cannot stop events from happening. What we do is mitigate the financial consequences of those events. So the solution we offer is insurance, which covers those events as triggers for loss.
Thank you. Bill in Suga, please talk about what clients can take. Please talk about where clients can take their insurance. Okay, complaints. The complaints
Okay.
tribunal. Yeah, I think their frustrations, the grievances.
Okay. Yeah, thank you, Billy. Insurers world over, the insurance industry is heavily regulated because of our fiduciary responsibility. We handle people's money, they trust us with their money, and all that you get from an insurance company is a set of policy documents. So we receive your 1 million, 2 million, or even 100 million in premium. And what you take from us is a contract, a policy document saying we shall pay you if this and this happens. Now, in the event that we are not coming to the party, we are not paying you as we committed to, and you feel that our refusal to pay is unreasonable and a breach of the insurance policy, still our regulators have provided a mechanism where you can go to the insurance ombudsman. There is an insurance complaints bureau at the insurance regulatory authority where you can file your complaint against any of the insurance players, be it an insurance company, be it an insurance broker, be it an insurance agent, or all of them at once. You can file a complaint and say, I filed my claim, I was never paid, and I feel it wasn't right. So these measures can be taken. And Juliet and the team at UIA, they also are very, very big advocates of us always handling any client complaints quickly. So if you can also reach out to them, they can also offer assistance. But the official channel is the IRA Complaints Bureau. And I think contacts of the IRA are online. They even have a toll-free line, and you can go there and get assisted in all matters where you feel aggrieved with insurance companies.
Thank you. Well stated indeed. Goreti Masande, why is it so difficult to access insurance information on insurance, sorry. Often when you search, you must request for quotes. Is it would be good to have information, those are sample rates, to digest as a way of getting interest and finally desire to purchase. The way it is, insurance doesn't allow you to window shop. Go home, think about it, and make a final decision, maybe on the time or
On the
when
end
reminded
time.
by an event. So basically, I don't know whether you get it, but my understanding about it is, can I do myself search and then make a decision without having to give in more about what I want to insure? And then you ask me, you send me quotations. Can I do my own discovery? And then, especially when I want to know how much it would cost me to have my home insurance without having to approach GA, for example. Can I do it by myself?
I actually love that question. It is the kind of question all insurers are battling to answer. Traditionally, insurers have always been the ugly cousin of banking. That is a joke that is thrown around. So we are cousins of bankers in that we are both in financial services, but you find that bankers have gone digital a lot faster than we have as insurers. But many insurers are now making ventures into self-service offerings online, where you can go online and basically just fish around, shop around, and basically you can even issue your own policy on some insurers' websites. You basically go in and ask, they will show you what potential premium you will pay. And if you buy in and you want to purchase, they say put your information here and here and here. And then before you know it, your policy is done. So, Goretti, I hear you. We are not yet where we should be. However, strides have been made to ensure, especially for the more bespoke products, travel insurance, home insurance, car insurance, most of that you can now get through apps online. You can go on to insurer websites, and they will not ask you to first provide all information and first see a quote. Rather, you will be able to see what is covered and the potential indications, premium rates, as you make up your mind. Question coming from a lady, I think is very understandable. You like shopping around and comparing before you make a decision.
Thank you. But probably also, like you said, we are getting there.
Yes,
I also want to give an example of the Moto third party platform.
exactly, exactly.
We, unlike before, you do not have to go and stand before this sales agent and ask them how much premium you have to pay for your motor third party. You can do that at your convenience through your phone, and you just present a reference number for a printout, a printed sticker. So we will get there soon. Yes, it's just that our steps are a little babyish, but we will get there with time. But we thank you for that, because this also informs us that we need to get to innovation and be able to make it a non-interactive kind of service where you make your request, the system, you interact with the system, so that at the end of the day, the insurer should be able to get the final document after you have consented to what you want. There's so much question coming in. And time may not be on our side because it's already 1 hour and 20 minutes. And I want to believe I should be done by 4:30. But I will request that you attend to this, because Clinton is asking, how does the insurance company, like any other insurance company, benefit from business of insurance? So I think that's you present them as another company, like Ambrose says, know your risk, approach any one of them, because they also have workers, they also have assets. So they also assess their risks and approach any other insurance company to protect them, because you cannot be your own insurer. So Ambrose, I would like to draw your attention to, I didn't get this person's name, but they say, Dear Ambrose, thanks for the presentation. How do you support clients who are currently struggling to pay premium due to COVID impact on their cash flows, yet they want to continue insuring their risks? Have we taken an initiative to reach out to people or businesses? Then insurance awareness is limited to formal sector. What plans do you have for informal sector, mainly farmers and those running small kiosks? Then finally, from the same person, any enhancements in your offering?
Hmm. Thank you. I think we've already tackled the one about supporting clients who are struggling to
Premiums,
pay
yes.
premium. We mentioned there that we've made payment more flexible, and most insurers have met their customers and redone their premium payment arrangements in order to accommodate the challenges they are facing. In terms of awareness and the fact that we are mainly dealing with the formal sector, yes, that is true to a great extent. However, a lot of strides are being made. I am personally involved with a number of initiatives where we are providing budget covers, micro insurance offerings to people in circles, to people in border business, to enable them to also access insurance services. We are also through the UIA. UIA is our collective arm, just like banks have Uganda Bankers Association. We also have UIA, and UIA has lots of initiatives. I'm sure Juliet will have comments on how we are reaching to those other um, rank and file, or the wananchi, the people with farmers and small kiosks. In fact, for farmers, there is already agriculture insurance that is in place, which covers even smallholder farmers, as long as they are in a grouping, they are in, say, an association, the farmers association, they are able to be assisted. So certainly there are measures. And then you mentioned that post COVID-19, are there any enhancements in our product offerings? Yes, indeed. In fact, most insurers are now starting to extend cover for COVID in some of their products. That is a reaction to market needs, market demands, and we are also changing our business models to be able to respond better in terms of such a disruption. Some insurers were caught unawares, their systems were not agile enough for one to run operations from home and all. So insurers are responding to that in the event that anything like that happens again. Over to you, Julie. I think that answers those questions from that member.
Thank you. There's one of us who asked whether what happens when one has an issue before completion of the insurance installment. If you have an issue with the installments of premium payment, you go back and discuss with your insurance company. Then you agree on how you will have to pay going forward. So these are discussions that you have around the table with the insurance
No,
company. Ambrose,
yeah,
Brian.
Julie, additionally on Goretti's question,
Okay.
yeah, she's asking what happens when one has an issue before completion of the installment payment. So I think she's saying I am on an installment plan for say 3 months, and in month one after paying installment one, my car is in a crash. Will I be paid or not paid? And my answer to that is similar to what you've said. They must discuss it with their insurer, but their installment plan should show clearly whether if a claim happens, the remaining installments fall due, or they will remain on the same installment plan until the insurer settles the claim. So approaches differ from insurer to insurer, and they would basically have to fall back to their insurer and clarify the position. Some insurers say if a claim happens, first clear your outstanding premium, the remaining installments, then we pay. Others say since we already agreed to the installment, let me pay your claim. I will also trust that you will clear your installments at the right time. So it devolves to the specific insurer you're dealing with.
Ambrose, there's a question from Ronald. He's using
Yes.
your quote. The South African insurance industry is the most vibrant in Africa at 8%, penetrating according to Ambrose's presentation. It's very hard work. It's very hard on marketing. Insurance advertisements are everywhere on TV, shopping malls, billboards, sales agents can be found everywhere on the streets of Johannesburg. Why is it not the case here in Uganda?
It's a very wonderful question. I love that question. It's a challenge. He
The
basically,
challenge of it.
yeah, he's throwing the gauntlet. Ronald is throwing the gauntlet to us as insurers
To
in
us,
Uganda.
yes.
It's like, where are you guys? Yes, we are a bit more visible. You see a few more billboards of insurance companies, a lot more ads from insurance companies, but certainly nowhere as much as it is in, say, South Africa and the European market, North America. So Ronald entirely agreed. We need to pull up our game as insurers in Uganda to be more in your faces through our salespeople, through commercials, through all these outreach events. Even what we're doing now is part of that process.
Sure. Maybe Ambrose, what you could also add on to that is the most often we receive an inquiry whenever we are out there trying to send some sensitization and awareness on insurance. What's the difference between a broker, an agent, and now we even have bank assurance agents? Because the bank assurance agents came in with the intention of diversifying the reach
Yeah.
out of insurance. So do you want to throw some light on the difference between the three distribution channels?
Yes, the beauty is that you partly answered the question. They are distribution channels. They are ways that insurers access their customers. So, um, insurance agents, brokers, bank assurance agents, or departments of banks, they are all insurance intermediaries. They are channels through which customers can be brought to insurance companies, and then they get their policies issued. The difference is that an insurance agent is usually tied to one or two insurance companies, and they can only represent those companies. A broker is a bit more free and is a corporate entity. They must have an office, and they are properly regulated. They have to issue accounts every year. So in terms of governance, their requirements are higher, and they are allowed to deal with the entire market. Bank assurance departments are basically an opportunity for banks who have a big base of customers to refer those customers for insurance to insurance companies and be paid a commission as an additional income to themselves for referring of those customers. And by doing it through the bank, we are leveraging on the bank's existing relationship of trust with the client as insurers to piggyback on the bank and also onboard that customer for insurance services.
Thank you very much, Ambrose. There's this, allow me ask you two last questions.
Yes.
Just, someone is saying, just how safe and easy is it for one who bought a car but has not yet transferred? Oh, this is third party, transferring of names, logbook names. How easy is it for them to actually do that? But there's a question, maybe you'll add on that. You'll talk about possibility of insurance without transfer of the logbook. There's a question on motor third party. Someone actually sent a comment here that they sent a number of questions in the
I think they're under the Q&A, under the Q&A.
In the email, but yes, there are those in the Q&A. There's this first one that says, this is a feedback from Silva Cheine.
Yes.
Third-party insurance is very difficult to claim with lots of bureaucratic back and forth until you let go. What measures is the industry putting in place to make it less painful to claim?
Yeah, I think I saw the question from Silva Cheune and I wanted to answer it first thing. Reason being, that is still a myth out there that insurers make it very difficult on third-party statutory. However, insurance companies through UIA even went as far as to say all you need is to have a police report mentioning what happened, vehicle number, this had an accident, so and so was injured. Bring that with the details of the insurance, go to the insurance company, you will be settled right there. So the bureaucracy was a matter of the past. Insurers through UIA made a very simplified process, I think requiring only 3 documents. You fill a claim form, get the police report, and basically we settle your claim. So it's no longer like that, Mr. Silva. And please, when anything happens, let those people go to the insurance company and they will be settled.
Thank you very much.
The only issue arises when we do not have any documentation, when we come belatedly, and there is no way to verify what happened.
Thank you very much, Ambrose. Because of time, we will receive. You can redirect the questions to the institute. We will be able to. They will forward it to the Insurance Association. We will definitely get responses to them and revert to you. Otherwise, I want to take this opportunity to thank you, Ambrose, for clearly and elaboratively attending to all the questions that have come through. The questions were very, very on spot. And it showed that there's a lot of work that we have to do as a sector. And from this, we should be able to go back and refocus our plan for next year as far as consumer awareness is concerned. I thank you once again for taking this opportunity to take us through this webinar as far as insurance as an enabler for business growth and continuity is concerned. Thank you very much, Ambrose.
Thank you, Julie.
Before we wind up the webinar, I would love the Institute to give us the responses from the poll. So as that happens, we would want to once again thank our sponsors for making this possible. Again, the platinum sponsor being Bank of Africa, Uganda. Thank you very much. All our sponsors, EcoBank, Equity Bank, KCB Bank, ABSA Bank, EFC Uganda, Finca Uganda, Equity Bank, Pride Microfinance, Ugaford Microfinance, Stanbic Bank, Opportunity Bank, Bank of Baroda, Bank of India, BRAC Uganda Bank, Housing Finance Bank, and Centenary Bank. Thank you very much for making this possible for us to have this sensitization. So kindly, we have the poll results. What is your occupation? 31% of you are in business trade, 8% are in farming, 69% are in services. Construction, we have 4%. Have you purchased insurance before? 65 are yes, 35 are no. So we really have to have work on the 35. We hope that this presentation has given you more insight and a reason to purchase insurance. Kindly feel free to reach out to us for guidance. As far as what has been your experience with the insurance service, 42 have said good experience, 54 moderate experience, and 4% bad experience. We are getting better. Thank you very much. We want to convert the 4 to the and add them on to the 42, as the 54 are about to get to the 42. So for those who are at 4%, kindly feel free to reach out to us as an association. We should be able to address some of the issues you've encountered as far as your experience with insurance is concerned. What form of insurance cover would you like to buy? 54 are considering property policies, 31% liability policy, 38% medical policy, and 58% life policy. Thank you very much. We will surely do what we need to do, like the South Africans, to be everywhere so you can reach out to us on these policies. How convenient are you with how insurance works? 38 are very conversant. No, the question was, how conversant are you with how insurance works? 38% are very conversant, 62% somewhat conversant, and we had none who was not conversant. So 0 is at no, not conversant. Would you recommend anyone to buy insurance? 96% say yes. Wow. And 4% say no. Thank you very much for your genuine responses. Thank you very much. I would also to remind us that we have more upcoming Digital Financial Literacy Week coming out. The Institute will guide us on the dates. But for now, it's planned for next week. But I was informed that I think there are changes, but the Institute will guide us in their communication on which day exactly the next Digital Financial Literacy will be. From the Uganda Insurance Association, we also want to take this opportunity to thank the Banking Institute for reaching out to us to partner in this. At least I'm excited because we have 96% of the participants willing to recommend anyone to buy insurance. You become our salespeople and you add on to the team that will help us reach at least 1% of the contribution to the GDP of the country. Otherwise, thank you very much, and I would love to wish you a very good evening. And if you want to reach out to the Insurance Institute, feel free to call us through our toll-free number, which is 0800 10 50 50. It's a toll-free number, whether on life-related issues, medical, any insurance-related issue. But should you not be able to, you can as well reach out to the regulator. Thank you very much, and I wish you a good evening.
Your money can help you achieve your dreams only when you save every time you earn. Learn how to keep part of your income to help you, your family, and business manage through emergencies like COVID-19 at the Banking and Financial Services Awareness Month. Meet the financial experts. Learn how to deal with financial hardships like those caused by COVID-19, how to prepare for similar emergencies in the future, how to create an emergency account, and how to save to achieve your dreams. Be money smart. Be part of the Banking and Financial Services Awareness Month. Visit www.yourmoneycan.or.ug. Brought to you by the Uganda Institute of Banking and Financial Services, UIBFS.